Okay, I see my face. So this is the cue. Good morning, everyone. Thank you so much for joining us today. Let me also thank all the panelists and keynote speaker for taking the time. And thank you to BSP for giving us an opportunity to meet and discuss today. Today we have a rather unexpectedly beautiful day in Brussels. So for all of you interested in getting some tan in the park later, we will make sure the event runs smoothly and we finish on time. Let's start with some basic house rules. So the meeting is expected to last about a couple of hours. We should finish at 12 at noon. It's being streamed and it will be recorded and shared later. So if you're interested in asking a question to the panel or to the speakers, please do so by scanning a QR code that you see on the there also will be a poll. So if you want to take part, please click the link that is out there, and we'll reveal the results of the poll later, closer to the end of the panel. So let me start with explaining why we have decided to organize this panel today. So the first reason is that the green bond market started to mature. Issuance of green bonds has risen, and issuers have never been more diverse. Once it was only supranationals such as World Bank or the EIB who issued green bonds. But today, a growing proportion of green bonds are issued by individual cities, national governments, and even corporations. When talking about green financing and green fixed income products, today's reality is way better than yesterday's reality. In 2021, the size of outstanding bonds is estimated to be way over $1 trillion. The second reason is growing demand for financing the transition to sustainability. In order to meet ambitious goals of global transformation, we'll need to spend between $5 to $7 trillion every year. A lot of companies from emerging markets, and CEE especially, realize that and have recently announced ambitious plans to decarbonize or achieve net zero carbon neutrality by 2050. Yet, this rapid growth has come with rising risks. In particular, there are concerns about the so-called greenium and the relative shallowness of the green bond market. Large amounts of standards and requirements are increasing the cost of bond issuance. We want to use this opportunity and today's panel to build a bridge between policymakers, money managers, regulators, and companies interested in finding a financial path to sustainability. And if we have enough time, maybe to debunk some of the myths around European taxonomy and green bond standard. We have a great event planned for you today. We will start with a keynote speech from Fabian, a person who not only chairs the platform on sustainable finance, but often guides us through the perils of building the taxonomy. We will follow with 2 case studies of companies that chose to embark on the journey to decarbonization, and one of them is actually planning to issue green bonds. After that, we will join our excellent panelists to discuss how to build a liquid and resilient environment for green bonds. So let me give the floor to Fabian now. Nathan, if you like to share your screen. Yes, I can see your face, so this is already a good sign. Yep. And the floor is yours, sir. I'm going on mute. Thank you.
Thank you, David. It's a pleasure to be here. I'm just making sure my slides are on full screen for people. Hopefully that will happen. There we go. Wonderful.
And they are indeed. Yeah, that's perfect. All You're right. Good to go.
It's good to talk to you all today. Thank you for the chance to share some thoughts with you. David, the Chief Responsible Investment Officer for a very large investor association called the Principles for Responsible Investment. And so recognizing the importance of the financial market response to the taxonomy and what will happen with loans and investments in the market in practice, I'm going to draw on insights from both of these roles today. I hope that's helpful for our deliberations. The first thing I would say is that there is a very fundamental shift going on in our understanding of environmental goals. That is why we are seeing a change in policies, and we're also seeing a change in market thinking around economic development, around investment, around where we're going to earn our financial returns in the future, and in fact, where our businesses are going to earn their profits. Now, I've just put a slide here that shows the environmental objectives we're working on, and most attention is focused on the climate change mitigation and adaptation areas, where we all know there is some urgency, and now we have very clear 2030 and 2050 goals in Europe, and they demand steep reductions in emissions. So this is a fairly fundamental shift. I think markets have accepted now that there's going to be a change in economic mix, and we're all thinking about how to allocate capital through this transition. The good news is that there is actually a lot of capital available for this transition. We have a world which is still earning very low income in many, especially in fixed income markets, but in many areas of our return portfolios. And so you combine the look for the desire for returns with the need for this allocation to environmental trends. There's actually quite a lot of market interest in where we can find returns from green activities. So that is a really good starting point, I think, when we're thinking about the transition we're about to experience. Now, the key points I want to take you through today is to try and explain how the taxonomy works, what it will not do, to try and allay some concerns, but also think about its role specifically in Poland and the CEE region, as this particular question of industrial and energy system transition is so critical here. And so I'm just going to briefly say what the taxonomy is. We see it as a description of the future economy, an inventory for the future. So it has a list of economic activities that meet the environmental criteria. It is going to support reporting in financial markets so that investors and companies can describe how they are increasing and changing their exposure or their allocation to this future economy. And the third point here, we see it as a transition tool. As I'll say today a couple of times, it is only one transition tool that will be used in the markets. This is a very important point. It's an important one, but it's only one. There are others, and I'm going to explain how they work together. In addition, we can't get away from the fact that there is science and evidential analysis here about what has to happen on environmental goals. And really, we have to resist this idea that we can fight the science. The evidence on reductions is clear. The political goals are clear. It's now up to markets to understand how to make the best financial and economic transition response to this. And the taxonomy tries to use science to say, well, what are we going to need in future? And there's really no escaping that. And then the last point is, we hope this tool will be dynamic. We hope it will change and reflect circumstances over time. And a big part of that is making sure that there is opportunity for lots of participants, market participants, to benefit from this tool. Now, what is the taxonomy not? What doesn't it do? And this is perhaps the most important slide in my whole pack. It's not a mandatory list to invest in. It's not a standard. It's not an exclusion list. And it will not replace other market practices with regards to sustainable finance. Now, as someone who leads an investment guidance facility or organization for over 3,500 global investment organizations with over 100 trillion of assets under management, I can tell you, we know what a mandatory screen is. We know what an exclusion list is. And the taxonomy is not that. Because if we applied it to our portfolios, we'd be taking that 100 trillion and trying to reduce it down to somewhere between 5 and 10 trillion. It just doesn't really make sense if it's used as an exclusion tool. This is a fundamental truth about the taxonomy. It describes how we want to green that 100 trillion over time. And in this case, we're talking 10 years to 2030, 30 years to 2050. And the taxonomy is best understood in that light. Now, the investment opportunity here is really substantial. I think you know that. The European-wide forecasts, the energy system investment alone to 2030 is forecast around 350 billion euros a year. Now, if you bring this into a Polish context, the data I've seen indicates the scale of the investment in Poland's energy transformation to 2040 is going to be somewhere in the order of 1.6 billion Polish zloty. That's an enormous sum. And in energy generation alone over the same period, we're in the order of 340 billion Polish zloty. This is an enormous investment opportunity. And the forecasts are that most of this investment in the energy system will be related to renewable energy, to energy efficiency. There's an enormous opportunity, and that is putting aside any expectations you have on the role of gas in the Polish energy system. Just on pricing alone, on the cost of technology alone, and on the most efficient ways to conduct an energy sector transition, we know that renewables and efficiency is going to play a very large part. So I say I come from an investment organization. A very common or a well-known investment strategy is to look for good value companies, good value markets who have a lot of potential, or which have a lot of potential upside. And I humbly say to you that Poland is a great green growth story. The amount of potential upside in retooling your industry, in retooling energy in Poland, it is a huge opportunity and much more significant than some of the more marginal returns available in other markets that have already restructured. So I know it's not going to be easy, but the opportunity is enormous, and this is important for investors. That is why the taxonomy is a fantastic tool to help Polish industry tell its story for the future. Let me tell you a little more about this. Now, we know that the taxonomy has a legal basis. There's no escaping that. And you can read this slide in more detail later. I'll make them available. Investors will have to verify the investments they make when they claim that they're contributing to environmental benefits. I think that's sensible. This is the new world. If you say you're green, you have to show how you're green. And I think that's a fair expectation. Now, this flows through to large companies. It'll be the companies covered by the non-financial directive, but we already know, I think this will flow on to suppliers. And it may start to come into the taxonomy tool may start to be used in debt finance on a voluntary basis. There's no legal requirement to use the taxonomy for general bank lending at this stage. We just have to be really clear about that. If banks decide to use it, they're doing it voluntarily for business and commercial reasons. And that's quite important. And when it comes to public funding, the role of the state and the EU generally is a bit different to private investors. Now, I'm not going to say that the public money should never seek to be repaid. That's a political decision, but clearly the expectations on public finance and in terms of industrial restructuring and transition are different for private investors. And so the EU is going to use this in a different way, the taxonomy in a different way to the way that private investors use it. And I think that's really important to note. Now, this idea of transition, the term is widely used, and most often it means let's improve our economy bit by bit until we get to 2050. And that's fine, but if I'm allocating, let's say I'm allocating your investment fund today, and you want it to earn returns throughout that period, I've got to start finding investments that I know are going to be part of the new economy. I've got to start finding green investments for you. There's no other option. And so the taxonomy helps me identify how I can change my portfolio by getting some green into it. And that's the type of transition idea that the taxonomy is built on. So this number 2 that you can see on the slide, when we talk about transitional activities in the taxonomy, they're still green because the taxonomy criteria are meant to say what's green and contribute substantially to meeting the goals. Again, this is just a point that we should note about what the taxonomy does, but it also demonstrates why taxonomy can't be the only tool, because it can't describe a portfolio transition. It can't describe an economy transition by itself. And that's why there will be other tools used in finance. So back to the opportunity, and I'm watching the time. I think I've got about 4 or 5 minutes to go, 3 or 4 minutes to go. So this is the Europe-wide picture. I don't think this audience needs much convincing that taxonomy is going to be influential. I think that's pretty clear from David's opening. But we've tried to set criteria that cover over 90% of the sectors with over 90% of the greenhouse gas emissions in the EU. And these same activities are about half of the activities of listed companies in the EU. So this is going to have an effect. It will have reach. But also, if we go back to that opportunity perspective, in manufacturing, in transport, in energy, in buildings, all sectors that we know are important to the Polish economy, this presents you a list. It's almost like a shopping list for investors. These are the things that they're going to come looking for, and they're going to say, have you got some of this? Can you tell me how you're going to reach some of these performance levels in future? And if you are, I'm going to make capital available to you. This really is a change in the way markets are thinking. Now, the good news is that even if you don't meet the criteria today, there's many ways you can use the taxonomy in your favor to help attract finance. So the first point here, you can say, well, a proportion of my activities are taxonomy aligned today. Maybe it's going to be 5%, I don't know. The typical diversified investment fund in Europe is between 5 and 10% taxonomy alignment. Now, they're still going to say they're trying to make it greener, and this is the point. Your business might have 5%, it might have 0%. It's kind of not the point. The point is that you are able to identify what it is, and then we come to number 2, you can set out a narrative or a strategy for your plans for the future. Now, if you can set out a strategy and plan for the future, then you will plan to spend capital. And this is where number 3 comes in. If you can take a plan and intentions on capital expenditure for your activities to meet the criteria over time, you are taxonomy aligned. This is the transition story. You can get a loan from a bank. You can get extra capital from your investors in order to finance your transition. And so this is a very inclusive story. It's a very positive story, regardless of what your starting point is. And the supervisory authorities have recognized number 3 in their advice to the Commission just on Monday this week. So I think this is shaping up very well. The 4th way you can use taxonomy is that some improvements, for example, in buildings, the best energy efficiency improvements like triple glazing or a best-in-class boiler and heating system, they qualify for taxonomy alignment regardless of the performance of the building overall. And so there's lots of improvements that can be made that will help you get green finance as part of transition. And the last point very quickly there, we're even encouraging research and development. If it helps meet the criteria in future, research and development counts. So we should just be clear that this idea that taxonomy is not going to support transition is just basically not true. It's not based on the evidence here about how you're going to use this tool. We're going to be able to use this tool, and I think that should allay some fears. This is my last slide. Going back to my earlier point, markets use a lot of tools when they're thinking about transitioning their financial portfolios over time. Remember, I said funds are somewhere between 5 and 10% today. Bank portfolios, maybe even less than that, depending on the institution. And they're going to think about transitioning that portfolio over time. So we're going to increase the green percentage, increase the taxonomy percentage over the next couple of decades. The other tools that they will use in deciding to allocate finance will be understanding if the business has a plan for reducing emissions, if they have good emissions data, if they actually understand what their emissions are, if they've got some targets, maybe set at 5, 10, 15-year increments, and if the business is large enough, there's a clear story on how governance and risk management on transition is used. Now, if we add the taxonomy as the 5th item here, that's the suite of tools that will be used by investors and banks to make decisions on finance. So there's no getting away from the need to have a transition plan to respond to the goals, but I hope it's very evident that it's not just a case that you will only get finance if you're already green today. The taxonomy is a transition tool. It's designed to help investors and business change their allocations over time. And again, with really full humility and understanding the challenges of transitioning our economies, for those economies that have the most to gain by changing, the potential in attracting capital with a good transition story, with real plans to make a green economy, stand to gain the most. David, it's been a pleasure to have the chance to talk to you. Thank you very much.
Nathan, the pleasure is all ours. Thanks so much for setting the stage and making sure that we are all on the same page. We will touch upon some of those issues during the panel, so we will have the opportunity to go deeper on some of those points that you have mentioned. Thanks again. Right now, I'd like to take you for another journey to invite two managers to tell you a story about their transition, about the transition of their companies, what some of the largest companies in Central Eastern Europe are planning to do moving forward towards decarbonization, and how they're planning to finance that. We're going to start with Radosław Żydok from KGHM, who is a director for regulatory analysis and strategy, who will tell us the story about one of the very important elements of the let's say sustainable ecosystem. Radek, please tell us the story about KGHM. Thank you.
Thank you very much. It's a pleasure to be here, and thank you for the invitation. I will now share my presentation. Hopefully you see it.
Yes, we do. If you can just press full screen.
Yes, of course.
And we're good to go. Thank you so much.
Okay. As I said, it's a pleasure for me to be here. Maybe just a short introduction about the company I represent. KGHM is a Polish-based mining and metallurgy company. Obviously, we focus mostly on copper, as the name says, Polish copper, KGHM Polish copper. But at the same time, very important issue is that we are second biggest silver producer in the world. Why are those metals important? I'd say even indispensable for the green transition, is that they are used in almost all the technologies related to the green transition. Copper is very much used in the renewables, in the smart grids, energy sector in general, infrastructure, and it's connected to the energy efficiency, as it is the best conductor. Only second to silver, but obviously the silver price is much higher, so it is not used as vastly as copper. We are based in Poland, but we are operating in 4 different countries on 3 continents. So apart from Poland, this is USA, Canada, and Chile. 80% of our production comes from Poland. Here are our headquarters, so we focus mostly on what's happening in Europe, and we are obviously following what's happening in the legislation. So I will focus now mostly on how we are dealing with this law and regulations affecting us. We are discussing today the green transition, which is somewhat new for many companies, but for KGHM, this is a part of our 50 years history. Almost from the very beginning, we were trying to improve our installations and lower our environmental footprint. And here are some data that shows that we already did do some good work. So in terms of sulfur emissions and dust emissions, we already have very much and huge improvements, especially over the last years, more than 80% of reductions. And the same for the metals, lead and copper emissions to atmosphere were reduced very heavily. So we have no problems with people getting cancer or something like this from living next to our smelters. Actually, our region is one of the most healthy in Poland, with a very long lifetime of people both living next to us but also working for us.
Radko, can I interrupt you for a second? Because what we see right now is the presenter's view. Could you just change?
Okay.
You know what I mean? We see like two. Yeah.
Okay. This should do.
Not sure what you need to tweak, but
now you should work. You should see the whole presentation. Yeah.
There's some lag, but it's still a presenter's view. So we see like two slides next to each other. I think it's a matter of.
I will try to switch this. Just give me a second.
Try simply pressing. There you go. Yeah.
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 Now it is how it should be.
Thank you.
Thank you. So obviously, up until now, we are focusing mostly, on this cancerous metals getting away from the smelters into atmosphere, into water, and so on. And now we are mostly focusing about greenhouse gases and our carbon footprint, let's say. And this is not something new for us as well. Almost 10 years ago, we've started huge investments in our energy sector, let's say, because KGHM is not only a consumer, the biggest one, the single biggest energy consumer in Poland, but we are also a generator. We have two gas steam plants in Głogów and Polkowice, operating in cogeneration based on gas. So it's obviously much lower carbon footprint than the electricity that comes from the Polish grid. And it has already gave us, let's say, 20% of coverage of our electricity needs. And what is important is that thanks to generating heat as well as electricity, we can, let's say, fuel the local heating districts for more than 160,000 people. And we are obviously introducing new standards based on energy efficiency systems to make it even better. Now, another thing that can really help in reducing the carbon footprint is using scrap. So we are not only mining, we are not only smelting our concentrate that comes from our mines, but we also use scrap and smelt it into pure copper. And this gives 80% of emission less for ton of copper. So if we use scrap as opposed to concentrate. And right now we are at the level of, let's say, 20% of copper coming from scraps, and we are trying to make it even bigger. That's why we've invested more than 50 million euro. 2 years ago, we've opened a new furnace dedicated to smelting scraps. And that's why the scrap usage is obviously rising. We are more than 90,000 tons per year right now, which leads and will lead in future as well to reduction of CO2 emissions in our Legnica smelter. Legnica is mostly the one that uses scraps. And we are not only using gas steam units, we are developing our renewables as well. We are optimizing all the energy sources we have. We are trying to build new as well as develop some new technologies for production of energy, but also for the storage. We are building competence. We want the energetics to be an important part of our business. And it has already paid out. We have first photovoltaic farm operational near our Legnica smelter 3 gigawatt hours per year comes from 3 megawatts. And now about the future, how we are going to make our copper green, not in the terms of making it oxide, but in terms of production. So we have next photovoltaic projects. The two on the slides are in the design phase, in the development phase. They are getting bigger and bigger, as you see. So the first one was 3 megawatts, now 8 and 6 and 5. Every one of them giving some energy for our smelters and mines. This is how it looks on the map, and how are the next projects in pre-design phase right now. As you can see, we are getting into dozens of megawatts, and hopefully even hundreds in the coming years, as we are getting to the target of 50% of electricity consumption covered by our own sources, and this is the target for 2030. And this is how we think our energy mix in 2030 may look like. This is only an estimation, it's not yet official. And this is mostly because of the wind part. We would love to have wind farms. We would love to build more new wind farms. But right now, obviously, the regulations in Poland are not allowing these new investments. But hopefully it will change, and it will lead to a huge capex in both photovoltaics and wind in the coming years. As you can see, it's almost 400 million euros for the next 8 years. And how it will affect on our emissions from electricity consumption. We consume circa 3 terawatt hours per year. Hopefully it will stay like this thanks to energy efficiency. And the carbon footprint from this right now, total emissions are more than 2 million tons, and we would like to reduce it roughly by 50% to 1 million tons in 2030. So now about some financial considerations. How can we get there? How can we finance those investments? First, we need to remember that copper sector, but let's say most of the metals, most of the base producers, we are price takers. We can't, force our clients to pay for the emissions rights we pay for, or the higher electricity prices that we are paying right now in Poland. This is due to the metals being traded worldwide, and they have one benchmark on the London Metals Exchange. And it's almost the same for most of the energy-intensive industries. Yeah, so I'm pretty much sure that the glass or the chemical sectors, they have some kind of benchmarks, and they have so strong competition that they can't force their clients to pay more. So from this point, every new investments, every new costs that are being put on us can be funded by rising revenues. So and what is more, and what is very important in terms of green bonds and the European market, for us, all of the money comes in our company in dollars. So this is the let's say this is the language of the market that we are on. If we were to use euro, we would have much higher risk from this. And obviously, it's not only about fluctuations between euro and dollar. It's even more about the volatility of copper prices, and let's say of all the raw materials prices. Due to this, we are not willing to dwell too much into debt, because we have obviously right now this is a very good year with copper prices rising to 10 times record high, 10 years, excuse me, but it can change dramatically within the next year or so, and then we will have a huge debt on us that we can't pay easily. So we are more willing to find some new ways to finance new investments, and there are some propositions like project financing, or even maybe some kind of capital entry, and maybe not into the companies itself, but into some of the projects that we are developing. And The problem with green bonds, or let's say generally ESG financing, is that right now the green bonus is too low. The decrease of the rate of financing by 20, even 40 base points, that's not something that will totally change the profitability or feasibility of investment projects that gonna cost billions of euros, because this is kind of money that you have to pay to get your smelter close to zero emission, not really zero emission. So for such projects, we have to find some alternatives. And there are some ideas already on the market. I'm pretty sure aluminium is in the front runner in that, to have a separate indices for those green materials, green metals, or sustainable, if you like to call them like this, and pay just pay more for this. That we are getting the metal from the industry that's really transforming. Or maybe another idea is that if such metals or materials are used in a public investments, those big projects like copper is being obviously used in this new infrastructure for energy sector. Maybe we should have some need to for this copper used there to be sustainable, and to check if we're not importing a lot of copper from China, where this carbon footprint or environmental footprint is much more worse. Obviously this can pay for both OPEX and CAPEX, because this will affect our profitability much more than the cost of financing. Right now, I'd say that the costs of financing are not really a big issue. Obviously, this is because we have very low rates, but in general, we didn't have problem with financing our needs from the market. So in very short summary, obviously, we can get financial support that will really make our transformation easier, if it will be help for our investments, for operation costs, which is very, very important for installation, like environmental protection installations. We are very much looking into possibility to getting grants for creating new jobs in sectors that can, let people switch from, let's say, coal mining. There's some possibility in Poland to produce new jobs for people leaving the coal mines and maybe getting into copper mines. But at the same time, there is really a huge possibility in regulatory terms to support transition. I can say just one thing, to build a photovoltaic farm in Poland, if it's big enough, like 3 hectares or bigger, you have to go through procedures that may last from 20 even to 48 months. So this is something that's really not countable in money. This is just not making these new investments visible. Thank you very much.
Thank you so much, Radek. I think thanks for raising those important points. I think that the case of Polish copper is rather important and difficult, because on the one hand, there is no such thing as electrification without copper, and on the other, it is a sector that is very difficult to fully decarbonize. So watching what you're trying to do there is very interesting. Thank you. Let's move now to Michał Perlik, who's executive director responsible for finance in PKN ORLEN and other industrial conglomerate that decided to announce carbon neutrality by 2050. Let's talk about all that, their plans, and how to finance it with Michał. Michał, welcome.
Good morning, everyone. Thank you. Can you hear me well?
We can hear you loud and clear. If you can just share your screen, and then we will be good to go.
Good. You should already see my presentation on the screen.
Yes, this looks great. If you just want to
screen mode.
Yeah.
Yes, I got it.
Yeah.
Great. So thank you very much. It's a pleasure to be here today. I will be happy to share with you more details about ORLEN approach regarding decarbonization, back with this short presentation. So decarbonization is definitely one of the major global trends at the moment. And both from the Central and Eastern Union and from the Poland perspective, it is for sure a huge chance for reshaping its energy segment. And it was, as it was already mentioned, it brings a huge upside potential for the country and for the economy. However, before I dive into benefits that are linked to the energy transition process, I will stop for a moment also to mention about the challenges that Poland is facing in this process. And most of the challenges are actually related to the starting point. And the starting point is as follows. At the moment, still, majority of our energy sources are based on the coal and lignite. Around 70% of power plants in Poland are based on this feedstock. With the country, don't have nuclear energy, which would be support and which would have a role in a stabilization of the whole energy segment, which is based on the renewable energy. And we also have quite obvious limitations regarding development of renewable energy sources, like sun is not shining in Poland as strong as in South Europe or Africa, and due to the relatively flat landscape, we also have some obvious limitations in terms of development of the water energy sources. But of course, the energy transition and the decarbonization process brings a lot of benefits and the chances to Poland and its economy. The first is it definitely improve the safety of the whole energy segment and improves the independence of the sector, meaning that we are not anymore related on the feedstock, on the natural resources, which are in many cases exported outside of the country. The other benefit is the improving efficiency in terms of costs. Renewable energy sources, they are much more predictable in terms of cost. We are not talking, as I mentioned here, about the feedstock price. We don't have a burden of the CO2 emission allowance prices. The other important aspect is definitely the fact that the energy transition is a strong trigger for the development of new technologies. And we strongly believe that it will be also the case in Poland, especially when we are, for example, talking about offshore wind farms. And the last but not least, obviously, the energy transition process is beneficial for environment and for society. And as every process, also the energy transition process in Poland, it needs a leader to facilitate it. ORLEN is one of the biggest multi-utility group operating in Central Europe, and we recognize that we have actually all the assets in our hands to become a leader of the energy transition process in Poland and in this part of Europe. We have a very good starting position. We are operating at the moment 6 refineries, but they are already high efficient refineries in terms of CO2 emission. As you can see on the slide, our refineries are in the second quartile of the most efficient production facilities in European Union. Of course, it's our intention to further improve this efficiency, which I will give you more details later on during this presentation. But what is, I think, the most important, that the last year, 2020, was a year of turnaround in ORLEN Group. We observed few facts that are critical for our further journey in energy efficiency transformation process. So in April last year, we took over Energa Group, which is one of the leading energy groups in Poland, together with renewable energy sources portfolio of 450 megawatts. This is one of the biggest renewables portfolios in Poland, responsible for around 5% of the Polish renewables total portfolio. We also took over an extensive grid. At the moment, we have almost 190,000 kilometers of power lines covering around 1/5 of Poland. And we operate 2 modern, high-efficient CCGT gas-fired plants in Polsk and in Wrocław, with over 1 gigawatt of installed power generation capacity. In September, we have announced our decarbonization targets and our decarbonization action plan, which I will describe in a second. And in November last year, we have also released a new long-term ORLEN Group strategy for 2030, which is very much focused on sustainable aspects. We as a company, we also have a proven track record in development of big investment project. We also have a solid capacity, financial capacity, to realize ambitious development and R&D programs like CCS, green hydrogen development, or recycling activities. And we have a well-recognized and perceived brand serving millions of customers in Poland, in the region, and cooperating with thousands of their companies. That's why we strongly believe that we are well positioned to be a leader of the energy transition process in Poland. In 2020, we went to an extensive exercise aiming at setting the decarbonization targets and an action plan for the ORLEN Group, which will allow us to align to achieve the decarbonization targets and align with Paris Agreement. We were actually one of the first utility companies in the region, and the first big companies in Poland announcing in decarbonization plans and targets. So it is our ambition to become a net zero, to become a neutral in terms of CO2 emission by 2050. But obviously, we also set up very precise targets for 2030, which are focused on CO2 emission reduction from our current petrochemical and refining production facilities by 20% till that time, and the reduction of CO2 emission per 1 megawatt hour produced in our energy production facilities by 33%. So our decarbonization plan is actually backed by 4 pillars that you can see on the slide. The first one is focus on further further improving of efficiency of our production plants. So as I mentioned, our goal is to reduce the current emission by 20%. Over the 9 months, starting from January to September of 2020, we made a very deep and extensive exercise investigating our production facility. And the outcome of this plan is a list of 60 very detailed technical energy efficient projects aiming at the reduction of the CO2 emissions. So we have a very precise plan, and we know exactly what has to be improved on which installation to reach this target. Additionally, our goal is to replace the energy which is consumed on our installation, energy from fossil fuels, with a green zero emission energy. We are also very much focused on the development of low emission and zero emission electricity energy sources. ORLEN is the owner of 1.2 gigawatts license for development of offshore wind farms. We are also heavily investing in onshore renewables energy sources. Only in February, we acquired 4 wind farms of 100 megawatts total production power. Our strategic goal is to reach up to 2.5 gigawatts of energy production power in offshore wind farms by 2030, and increase our onshore renewable portfolio, meaning wind farms and PVs, by 800 megawatts over the next decade. We are also one of the leading biofuels producers in region. Currently, we are developing 5 large capex projects related to biofuels, and we want to increase our biofuels production 6 times over the next 10 years, of course, including production of biofuels based on the second generation feedstock. And for all these investments, we need to invest over 25 billion zloty over the next 10 years. This is around 25% of our total development capex in the next decade. And of course, part of this amount will be financed from our current cash flow, but we would like to also external investors participating in this process. That's why we announced that it is our intention to become a regular, frequent, sustainable and green bonds issuer, both on the domestic and on the European market. And we made a first step towards this target in December last year, issuing first ESG rating-linked bonds in Central Europe. The issue of 1 billion Polish zloty was made based on the MSCI rating, and it's structured in a way that the bonds are offering step up on the coupon in case of the rating downgrade by one or more notches. As I said, this was one of the, and this was actually the first this kind issuance, bond issues in this in our region, and it was the let's say the feedback from the investors were very positive. We have over 2 times subscribed during our book building process. And as David has mentioned, we are currently preparing ourselves for the green bond issue on the European market, which we honestly recognize as a very challenging process, but we also strongly believe that it will bring us a lot of benefits. And I will be happy to share both with you during this discussion, during the panel discussion. So thank you very much. That would be all from my side for the moment. I give us back to David.
Michał, thanks so much for this perspective and showing what ORLEN is doing to on its road to sustainability. And I think that the perils with the issuance of the bond and what kind of hurdles you need to go through will be a great contribution to the panel that is now coming. So I'll be asking you about those in a couple of minutes. We have reached the half of our webinar, so we will jump right into the panel. And today I would like to start our discussion in the panel from a broader, maybe world and then European perspective, and then shed some light on the Polish market and its idiosyncrasies. And today I'll be talking, frankly, to a dream team of specialists on green bonds. We have Sean Kidney from Climate Bonds Initiative, CEO and member of the Platform on Sustainable Finance. We have Eila Kreivi, European Investment Bank, Director and Head of Capital Markets. We have Piotr Arak from Polish Economic Institute. Hi, Piotr. We have Piotr Borowski from Warsaw Stock Exchange. He's a member, CEO, COO, and a member of the management board. We have Axel Fogna from DG FISMA, a leader of the Green Bonds workstream in the Commission, and we're going to have Michał, who just presented the case of ORLEN. So the plan is to have 2 rapid rounds of questions, and then we'll open the floor to questions from the audience. If I can ask you all to turn on your cameras. I think I see almost everyone. But did we lose you, Eila?
Not my voice, but my camera refuses to turn on. If
it refuses, then this was meant to be. Don't worry about this. Don't give it a second thought. Once it decides to turn on, I'm sure it will. Let me start with Sean. And let's start maybe with a macro perspective. If you could tell us more where the global market of green bonds is right now and how the EU is looking in comparison. Where are we on the world stage of green bonds market, Sean?
Sure. Well, look, first can I say that in Poland we've had 15 billion zloty of green bonds issued so far, with the government of Poland, of course, being the largest issuer, but also the first sovereign green bond issuer in the world. So that's a pretty cool result. Of course, we're hoping that the Ministry of Finance will do a lot more going forward. But globally, we're at about $1.15 trillion equivalent outstanding of green bonds. So this is a huge leap in the last 5 years, but of course tiny still compared to the $100 trillion global bond market. But it's certainly the fastest growing asset class over the last few years. In the last year, we saw modest growth for the green bond market, big growth the previous year, but we saw huge growth for what I will call the daughters of the green bond market, sustainable social bonds that use the green bond framework, use of proceeds and so on, to create similar kind of instruments with different kinds of application in terms of use of proceeds. I guess the other thing you can say that in 2020, pricing and value retention issues became sharply clear. In March, I remember having one conversation with a major US investor, a very, very large fund manager, who said to me that while global bond markets froze, green bond markets remained liquid. Now that is gold dust for an investor. We've already seen, and I guess the reason is that people believe that green bonds will hold their value, because we've seen in the past, whenever there's a downturn in bond markets, green bonds hold their value and other bonds go down. In other words, they're a value retention product. This is a standard bond with simply a bonus feature. So as Eila will tell you from the European Investment Bank, the very first issuer of green bonds in the world, by the way, in 2008, it's curious how this simple product makes a big difference. But of course, investors are using this instrument as an indicator that the institution issuing is doing something positive to reduce their forward risk as a result of climate policy impacts or possibly climate change. And that's become very sharp this year now that we see significant price benefit beginning to shape up in the European market, from the German Green Bund that got a 1 basis points benefit on negative interest rates for their issuance, and now is trading at between 4 and 8 basis points premium in the secondary market, to lower rated bonds that have got between 10 and in some cases 30 basis points benefit for them. This is all because of that secondary market benefit, their value retention aspects of the green bond market. So, hey, it's been a pretty cool year, despite the brutal nature of the pandemic we've all been through, despite people thinking that green investment would collapse in the face of what we're trying to do. We've come out of it with a resurgent thematic bond market, a huge bond market. We've come out of it with the European Commission and a European commitment to build back better, to build a recovery with resilience with green, which is absolutely fantastic, which I think pivots Europe into a global leadership position on this issue, supporting other countries around the world. And an indicator of that is that we now have 110 countries around the world committing to net zero targets by 2050. This has become a dam break.
Thanks, Sean. I think you raised an important point of a spread in favor, especially in times of higher volatility, in favor of a green bond. Let me take this question to Eila. Since the beginning, the EIB, as Sean mentioned, has been a trailblazer in this process, and you seem to understand this product extremely well. Can you maybe, we've heard some doubts or maybe some problems that Radek mentioned, why they are not looking maybe right now for bond issuance. But what investors should look for in green bonds? What are the other reasons why investors would look for issuance of this fixed income product?
Yes, thank you, Kasper. There are many reasons, of course, and not every investor has got the same reasons. One reason which starts to be the case is, of course, the regulatory pressure to show that I am investing green, climate, whichever it is, or sustainable ESG, SDG. So this pressure is growing. On the one side, by regulatory measures, but also by disclosure pressure. So and the peer pressure that comes from disclosing. If your neighbor is disclosing that we invest green, the pressure goes on the next one as well, and so on and so forth. But there's also a genuine demand for this. There's investors want to buy them for all the reasons that Sean was mentioning, because they are keeping their value in the difficult market circumstances. This has now been tested over a number of for the last couple of years, for example. And now we have a critical mass in the market so that you can actually draw some conclusions. When we had a few billion outstanding, you could not really draw any reliable conclusions from that situation. But now we can, and we have seen some severe turbulences in the market, and we know already what it is. Investors also, they want to give more information to their clients. This goes especially for asset managers, but sometimes for pension funds, they need to give information to the regulators. What is the impact of my investments in the climate sense or in other sort of good cause senses? And green bonds and the daughters of the green bonds, they provide this additional information. You get reporting on where and how and on which loans or which projects the funds have been used. What was the impact of it, either carbon emission reductions or some other indicators, depending on your investment sector. So this is all valuable information. I think the days are gone when you just invest based on some yield return expectation numbers, and that's the only thing you want from your investment. Whatever you invest in, green or otherwise, I think people just want to have more information about the impact, be it environmental, be it social, be it whatever. And the companies who want to raise debt or other kind of financing will just need to adapt to this world, and they are, as we saw from the previous presentation. So I think those are the main causes, and we see investors asking us questions. I mean, we already provide quite a lot. We have a very sophisticated reporting system on both our climate awareness bond, and then we have the other product, which is sustainability awareness bond, which invests in other environmental sectors than climate, and then also social sectors like health, education, etc. People are asking more and more questions. We tell you, for example, we did this water project in Africa, and so on. So many people got first-time access to clean drinking water. And the next question is, could you give me some information on the income structure of these people? So you know, it's you get hungrier the more you eat, in a way. And these are the products that give them on the general corporate purposes bonds. We are not there yet. Maybe one day we will be. You don't have the same level of information. And this has it, and you don't need to ask for it. It comes with the product. That's the nature of the product. So I think those are the main reasons. Thanks.
Thanks for that. I think this is very interesting, and you also show how many different products you can build on the same platform of the bond that will contribute to different environmental goals or maybe social goals. So those products will grow. But I would like to take us back to green bond standard, and maybe Axel, I'll put you on a frying pan over here. Tell me, for everyone interested in issuing a bond compliant with the GBS standard, as we know, we are still working on it. Let me engage with you and maybe tell us where the European Commission is today. What does it look like? What is the timeline? If I want to have a bond compliant with the GBS, what kind of time frame should I look at? Should I tell Michał, stop what you're doing right now, wait a couple of more months, you're going to have a standard that will be present in recognized in the EU?
Well, first of all, hello everyone, and thanks for this very interesting question. I mean, it's really a pleasure to be able to talk about the EU Green Bond Standard with you. I think to the European Commission, we see green bonds really as a European success story. We see that green bonds have already play a very strong role in financing the type of investments that we need to transition towards a low carbon or climate neutral economy. And of course, it's crucial that we continue to encourage this trend with the phenomenal growth that we've seen in this market over the last few years. At the same time, we also want to make sure that the current emphasis on financing truly green assets that truly contribute to that climate transition is maintained. We think that the green bond market as a whole is based on high standards on transparency and assurance to investors, and this needs to be maintained as well, not least as the market is growing, and in a way growing in all directions, you could say. As more and more actors are joining this market, we see the emergence of other types of green bonds, etc. So maybe to get back to your question, as you know, the European Commission is working to finalize not just a proposal for EU green bond standard, but also the technical screening criteria that will underpin the EU taxonomy. And I think this is where a large part of the focus is right now on these sector-wise criteria that will cover, a large part of the economy. The EU green bond standard will, in a way, be an implementation of that taxonomy. So what we want to do is, because the taxonomy is arriving and it will be rolled out starting very soon, we think that there is a need for an EU green bond standard to implement that taxonomy. So just to give you in a few key points what that will be, we are looking at a voluntary gold standard or high quality standard for green bonds. It will be entirely based on the taxonomy, which means that use of proceeds will have to be used on taxonomy aligned assets or capital expenditure, and also certain operating expenditure. We are looking at a voluntary standard, meaning open to a wide range of potential green bond issuers, including the private and the public sector. We are looking at a standard that will follow market best practice today, meaning reporting on allocation, reporting on impact. We would like a strong focus on external review, both of the bond framework itself and of the allocation of proceeds. So those are the main elements. In terms of the timeline, the current plan is to propose the EU green bond standard. So there will be a commission proposal in June of this year. But then, of course, that's just a proposal. Afterwards, it has to be adopted by the European Parliament and member states and the Council. So there might be there will be a further period before the EU green bond standard is available as such in its final form. That is for sure. We already see some actors making use of the draft standard today. The draft standards or the concept for the EU green bond standard as put forward by the technical expert group. But because this is a legislative process, it will take a bit more time.
Thanks. I think that this is quite clear. So the order of proceedings is quite clear to us. We first need to focus on technical screening criteria. The platform needs to conclude work there, and then this will serve as a backbone of the future GBS. While there are still some players that are already looking at the tag work, and they're trying to link their bonds with that standards, hoping that it will qualify for their future bonds. This is great. Let me move the discussion a little bit to the Polish market for a second, and and use it as an example of a system that really needs to undergo the transformation. Let's start with Piotr Arak over here. You understand Polish economy. Could you tell us a little bit more about, we've heard some numbers about what kind of size of transformation we're talking about, how much money needs to be raised. So if you could elaborate a little bit more on that, but also is this kind of product, we've heard from two companies, but they are the largest ones. Is there an interest in these kind of fixed income products from different players other than large corporations, maybe municipalities, maybe local governments? Piotr?
Okay. Hi. Hope you all guys can hear me. Hello from Warsaw.
Loud and clear.
So great. The Polish energy strategy actually was published or was leaked to the press yesterday or this morning. So and it's supposed to be published in a few days. More of the public and probably the European Commission is going to see the costs of the energy transition estimated by the analysts for the Polish Ministry of Climate. So I can elaborate a bit on that. So the basic costs of of transforming the energy sector, its infrastructure, is probably going to be around 200 billion euros. And this is just talking about the energy sector up until 2040. So this is not even to 2050. Together with that, there is the cost of adapting of consumers, basically in the housing sector, businesses, in terms of basically each other sector other than the energy one. And this is the additional 200 billion possible euros needed in order to change this system. So I would say that the costs of the energy transition are probably severe. We now know that on the green bonds market, there isn't sufficient money yet in order to reach the Paris Agreement targets. So we know that each country is probably going to face the same problem as of issuing enough bonds. But I can say that in my private opinion, so talking about the Polish market, it's not only the debate on the green bonds, whereas there's probably going to be a very big need in order to raise money in order for this cost to be somehow mitigated for the energy sector, but it's also the cost of the transformation itself. And it means, and there's no strict definition of, we're talking here about green bonds, but there's no strict definition of transformational bonds. So there are some groups of bonds issued by companies or by countries which don't reach this special and technical kind of measures that the green bonds should take, because there's not enough renewable energy, for example, created, or they're not as climate neutral as they should be. They're not green enough, I would say. But the reason for the issuance is also the need of transformation of the energy sector. I saw some debate, among economists about this transformational bonds, and probably we're going to see a lot of different kinds of not only EU member states, but also some other, for example, South Asian countries looking into those bonds, which can create the need for a transformation. Still, for example, turning from coal to gas, which is an important issue, where you know that the reason is not that green in terms of what the EU Commission sees it, but it's going to the it's going in the right direction in terms of the goal, which is going to be reached. And there's also another, I would say, interesting topic connected with circular economy. Due to increasing recycling of the trash created by citizens in smaller rural or smaller cities, and the rising costs for the end consumer, I guess there's going to be need for the smaller cities and smaller municipalities on bond issuance in order to sustain and increase circular economy within their system. So this is, I think, some of the quite interesting developments on the market for the next couple of years in order to decrease the prices. Because if no other, investments besides debt is going to be created, the prices are still each year going to go up for the end consumer, which is problematic in terms of political relations and public relations for the self-government, but also it could have some inflammatory effects, so inflation creation, as we see each year with the changes in terms of the pricing from the self-governments. And I guess this is quite an interesting road that some of them are probably going to take in order to increase the circulation of making it the trash more recyclable and creating circular economy. And I see it as an interesting development. And what was said by Sean already, so Poland was one of the biggest issuers of green bonds just at this moment. So in 2016 and 2018, I guess it was the last time. Probably we're going to see more of that because of the needs of the transition period. There's each sphere of the energy sector is going to have to be, is going to need investments. There are going to be introduced many projects. Poland is going to receive approximately 260 billion Polish zlotys of additional support from different kinds of EU funds up until 2030. This is also coming from the ETS in order to make this transition period possible, but we still don't know if the estimates that we have in hand are optimistic or pessimistic. So we hope that the costs are going to be lower at the end. But still, for example, with the creation of a nuclear plant in the strategy that we have, this also means that there are many additional risks to be taken into account, and also we don't know, what's actually going to happen on the market. Hopefully, the prices are going to go down, decreasing the needs of issuance. But I don't see that happening quite easily.
Yeah.
So the need to raise money is probably going to be bigger.
Thank you so much. I think that two very interesting points. One, municipalities issuing their green earmarked bonds, and the other topic of bonds issued for the transition, which is a hot topic right now in Brussels, and the European Commission is addressing this issue.
And also too.
Yeah, I'm sure they are, and I'd like to go back to that. But before we do that, let me take our conversation to the world of a bond as a tool, and issuers, underwriters, verifiers, investor in various shapes and form, and stock exchanges are the part of this ecosystem. So I'd like to ask Piotr maybe to tell us more about an investor, a typical Polish investor. Do you see any interest in, broadly speaking, ESG investing? Are investors paying attention to the sustainability of the products they're buying? Do you see this market as a growing one moving forward? And I apologize for a 12-part question that I'm throwing at you, but all those issues are super interesting.
Thank you. Good morning, everybody. Yes, the trend is clear. There is more and more interest among world and Polish investors in green investing. It's also fueled, supported by the regulations. So asset managers, fund managers, they will need to choose green investments. So it's simple like that. And among Polish issuers, the listed companies, we also see the trend to issue green bonds or transition bonds. Especially, I think that the transition bonds will be very important sector in the coming years. And this is a big challenge from the perspective of an issuer to prepare the green bond issue now. So that's why these bonds are issued by the leaders, by the biggest Polish companies like KGHM or PKN ORLEN, but also the big energy distributors like Energa and Tauron, leader in media, Cyfrowy Polsat, company also listed on the Warsaw Stock Exchange, and so far 2 mortgage banks, they issued green covered bonds. It's ING and PKO BP mortgage banks. So the scene is set, and only the biggest companies now can afford. They have enough resources and knowledge to deal with this. And I think that this market needs to be more clarified. So we are waiting for this EU green bond standard. I think it's very, very needed because now we see a lot of companies going into this market as a consultants, a few standards, classifications, etc. And I think that this has to be more clear for the issuers. And this is also the matter of cost, but also of the visibility. I think that all the big companies, they need to change, they want to change, and one of the methods to show this are these green bonds, and it's also very important for the reputation and for the visibility and public image. So I think that this sector will develop fast in the Central European countries, but we need to take into account the challenges connected to this.
Thanks, Piotr. Very useful. And so it looks like the whole environment for the product is growing on both demand and supply side, which is great. Maybe let me ask Michał now, who is in the midst of issuing a green bond. I know that we had few conversations about different hurdles that you need to overcome while doing this. Not sure how much you are open to share with us at this stage and how much you can, but what would you find most difficult in the process?
Sure. Thank you for the question. I think I would highlight three issues here. The first one is issuer aspect. So the question whether everyone can be a potential issuer of the green bonds. It's not that obvious because some people, institutions or investors claiming that not all companies, especially companies which are coming from high emission sectors, can be issuers of the green or transition bonds. From my perspective, it should be more analyzed, or the focus should be more on the company's willingness to transform instead of the starting point, because the starting point is very different in case of different companies. So it's quite obvious that for me that you cannot consider or issue a green bonds if you are not able to declare, if you are not ready to declare a transformation of your business, and if you are not ready to disclose your metrics, and you are not ready to set your ambitious targets. But it should be allowed even for the companies which are originating from the high emission sector to allow them to issue such instruments, which would facilitate the transformation process for sure. So this is the first issue, and it will be probably some kind of challenge for us as a company to also change the investors' perception from the refinery business company to multi-utility business company. Fortunately, we have, as I described, a clear decarbonization strategy and targets and a clear action plan. So I'm very positive about it. But still, there are some voices on the market about the limitation of certain sectors to issue green bonds. That would be the first issue. The second issue is that the variety of many taxonomies, standards, criteria that are available on the market. And again, it's not 100% clear to potential issuers which standards should be met in order to make sure that the green bond as a product will be accepted by the investors. So we don't have one platform, and we don't have a clear guidelines on that. And one of the best examples is that for the green bonds, you have to collect investment pipelines, which green investments pipeline that will be a subject of financing by green bond. And there are examples of the investments which cannot be certified under some certification criteria, not because they are not green, but because there are not defined criteria for this particular type of investments, which makes the whole story even more complicated and challenging for the companies, because you have to exclude those kind of investments from your pipeline, which will be presented to the investors. And on the top of that, you have investors who are developing their own standards and their own taxonomies, and they are not always complying with the independent institution standards and taxonomies. So you cannot be sure that even being very transparent with ambition targets, you will meet all the investors' expectations and the requirements. And the last thing, it was mentioned already, and actually ESG at the moment is very much focused on the decarbonization, even though it's much broader. But when talking about sustainable bonds, the decarbonization is still the major topic, and it's quite obvious because it's point number one on the European Commission agenda. However, the other topics which are probably comparably important, like I don't know, waste management or the water management, are not that highlighted. It will probably come in the future, but at the moment it's not. And when talking about decarbonization and, for example, Scope 3 calculation, which was also already mentioned, it is also not fully clear how the targets and the Scope 3 emissions should be calculated and presented to the investors. Some companies are, focusing on the production facilities in the EU only. Some are presenting selected business units. Some are calculating top down, and others are calculating bottom up. So again, there is a variety of approaches when talking about Scope 3 calculation. So summarizing, still there is no single common approach regarding standard of the green bond or sustainable bond, which will give you a guarantee that the investors will perceive your instrument as a green one.
This is great, and I think that you raised a lot of interesting points. So I'll definitely going to give the floor to Sean and maybe to Axel later to tackle the issues raised by Michał. Sean?
Michał, we can place tomorrow in the European market at a preferential rate green bonds for water, for waste, for ICT, for agriculture, for transport, for green buildings, for all sorts of sectors. There is no barrier at all, and the rules are remarkably clear for all of these things. Of course, in the EU taxonomy, there is a little bit of an uncertainty about where the rules are coming, but they won't come into force anyway till the end of the year. And we're working very hard, Eila and ourselves as members of the platform, to making sure there is continuity between the existing market. But I can tell you, speaking from analysis of the bonds that are in the market now, that the investor appetite for a wide range of assets is very clear, that the kinds of criteria are pretty straightforward. For example, if you were to get climate bond certification for pretty well any of the measures you talked about, you would be basically consistent with the green bond standard, the green bond principles, and the European taxonomy in its draft form later on. Now, there'll be more detail, the do no severe harm provisions and so on going forward. There's a little bit of uncertainty, I get that, but the broad outlines are pretty straightforward, certainly in terms of what we need to do in water and waste. That's my first point going forward. So we can make it easy for you if you want. We can help you and bring you to the market, and I can assure you we will find investors at the moment. There's a wall of money in the market looking for green. We could place trillions and trillions tomorrow morning if only we could get the issuance out. That's actually our problem at the moment. It's not a matter of rule sets and so on. But I also just want to go back to Stefan around transitions. We have in the EU taxonomy, in the Technical Expert Group report and in the Draft Act, had a long discussion about transition. So it is true that there have been some transition bonds, which I would call transitions to nowhere, because they're not transitions to the Paris Agreement. What we've said in the taxonomy is we absolutely need transitions. We need a pathway for high carbon industries and sectors to shift towards low carbon that are consistent with our European Union Paris Agreement targets and commitments. That's essentially it. Now, there'll be a bunch of ways of doing that. Total deciding to issue all its bonds, sustainability linked bonds, consistent with its 2050 targets, is one way to do it. That's great. Another way will be issuing bonds against the retrofitting of gas pipelines to make them hydrogen ready. Something allowed in the European taxonomy, by the way, which is again a stepping stone investment as a transition. And then, of course, we've got the idea of a high carbon company issuing renewable energy bonds, absolutely to be welcomed and consistent with the taxonomy. I think there's a lot we can do it. The gas is complicated. because you can't issue bonds to get something which is not going to get us where we need to get to by 2030, let alone 2050. At the moment, we're having a discussion, as you know, in the Commission around the European taxonomy rule sets. The European Investment Bank has already made this very clear in its lending policy where it's going. Gas is certainly on the way out. At the very minimum, very efficient gas with a mixture of hydrogen would be necessary to qualify, whereas general investments in gas to replace coal, unfortunately, are not consistent with the emissions reductions pathways we have to achieve, complicated by the fact that if we build an LNG gas-powered plant in Poland, the emissions factors we're now discovering, looking at the fugitive emissions over the lifetime of gas, are huge. And in fact, some LNG gas-fired power plants have the same greenhouse gas footprint as a coal-fired power plant. This is utterly shocking. And this has got to be something we look very, very carefully at when we're looking at transitions involving fossil fuel. So it's very complicated, that territory. It's not as simple as saying a transition is okay if we have gas. But the circular economy stuff, you are dead right. We will see a lot of issuance around circular economy. As you know, in the taxonomy, we have a working group looking at circular economy rules that'll publish a report in May. And I think there's a lot we'll be able to do in Poland in that particular area. I look forward to a lot of issuance as those rules come out. And I don't think we'll need to wait to that aspect of the taxonomy becoming regulation. A bit like we saw KEYNOTE and SNAM issue bonds last year against the hydrogen-ready gas pipelines, even before the taxonomy had gone to a draft act. We can start working on bonds for circular economy from the beginning of May, when we'll have the draft circular economy criteria. We can get moving fast on this. We can do a lot of business.
Thanks for that, Sean. Let me take it to Axel right now. So you know, Michał mentioned that there are problems with standards recognition by different types of investors. So, am I guessing correctly that GBS, in the eyes of the European Commission, is a standard that will dominate all other standards and maybe become a global standard in the long run? Is this what the Commission is looking for moving forward in 10, 20, 30 years?
Yeah, thank you. Maybe let me just answer that question and then say a bit on this transition issue as well. So first of all, I mean, I understand that it can be complex. The current landscape of standards and requirements and criteria can be confusing. At the same time, I mean, I would agree with what Sean basically was saying, that the standards that are on the market today, although some are more prescriptive and ambitious than others, they are also relatively compatible. And in a way, we see this landscape as a set of cumulative standards, or at least standards that are not incompatible. And we want to continue this logic with the EU Green Bond Standard. So as I was mentioning, the intention for the EU Green Bond Standard is to base it on market best practice. It's certainly not our intention to have anything in the EU Green Bond Standard that would also exclude alignment with other standards, the ones existing on the market today. So in this sense, I hope we will not contribute to fragmenting the market in any way. At least that is definitely not the intention. On the point of transition, which was, well, maybe first, I mean, you mentioned, will the EU Green Bond Standard dominate the market or not? I think the EU Green Bond Standard, our goal is not to I mean, we're not trying to set a specific goal for market share right now. What we want to do is make sure that for those issuers that want to demonstrate their alignment with the EU taxonomy, that they have a recognized, standardized way of doing that. And that should be the EU Green Bond Standard. And then it will be voluntary. It will be up to the issuers whether they make use of that standard or not. There is, of course, a whole set of regulatory, there is a whole regulatory framework that is coming into shape right now. So I mentioned the taxonomy, where the final proposal for technical screening criteria will be adopted by the Commission in April. That will already give a lot more clarity. Then we have other developments. We've talked about disclosure requirements for asset managers for the financial sector. Nathan also mentioned in his introductory segment that companies currently subject to the non-financial reporting directive will have to disclose their share of taxonomy-aligned revenue and their share of taxonomy-aligned expenditure. And this is something which is also very relevant for the EU Green Bond Standard, because in the recent advice set out by the European supervisory authorities on how this reporting on taxonomy alignment should be carried out in practice, the European supervisory authorities proposed that for capital expenditure, to be taxonomy aligned, it should be part of a plan. And they mentioned a 5-year plan. It could also be longer in certain cases to make the assets taxonomy aligned. So the expenditure has to be part of a plan, has to be sort of demonstrably part of a plan to make the broader asset taxonomy aligned. And this brings me to the transition point. So Sean was talking about a transition to nowhere. The EU Green Bond Standard will allow transition towards taxonomy alignment. This is one of the main points. And the capital expenditure example that I was just talking about is exactly key here. So the EU Green Bond Standard, because it has this use of proceeds approach, it would allow corporate issuers, for example, to use bond proceeds towards making their activities gradually become taxonomy aligned. Doesn't have to be right away, but it can happen over time, as long as the end point is in line with the taxonomy technical screening criteria. So in this way, we think EU Green Bond Standard will also certainly enable that transition.
Thanks for that. I think a lot of important points over here and discussion about transition. And I'm also reading some questions that we got from the audience. I'm trying to plop them into the questions I'm giving to you. So maybe my 12-part question for Eila now. Let's have a look at it from a banking perspective, right? And there's a lot of worries about what has been mentioned over here, the cost of transition. So there is this atmosphere and this narrative about all the banks tightening their lending policies. And a couple of days ago, EBA announced that European banks will have to disclose just how green their lending is from the end of next year. And under the proposals, lenders will also have to publish their exposures to heavily polluting sectors and any mitigating steps they're taking to transition their books. AIB, as we mentioned over here, has in some cases much harsher lending policies that taxonomy is currently mentioning in the delegated acts that are being consulted. So can you tell us more, like two-part question over here. One, does it mean that companies that are not eligible to issue a green bond or not eligible for the taxonomy aligned assets, does it mean that they won't be able to get any financing ever again, period? And second, maybe and this is the question to all of you, maybe from the European and Polish perspective, how much effort in the next steps European Commission and maybe state level legislations will put on promoting the green bonds and yeah, Eila.
Okay, thank you, Kasper. Yeah, that was a sort of question with many different branches, I guess.
12 parts. That's yes. What I'm famous for.
Okay. Well, what EIB did was there have been two things. First, this was already a year and a half ago when we decided that we go out of fossil fuel lending. Or fossil energy lending. This was based not because we are banning anything, but on a simple sort of economic thinking. We are a bank, in spite of being a public sector bank, we are still a bank, and we have a certain amount of capital, which is a scarce resource, and we have to allocate it wisely. So we decided and proposed to our shareholders, who approved it, then that EIB's lending capacity and capital should not be going into areas where, for example, assets risk being stranded assets over the next 10 or 15 years. That's not wise use of public supported money. So we would focus on the future technologies also, which need more support. It doesn't mean that we are banning anything or anybody else is banning anything, but it means that we are directing our capital towards where we think that the money is best placed. Now, going a little bit back to the green bonds as well, I don't think there are any companies who are not allowed to issue green bonds, but I think the market has matured now a little bit in the sense that if you are, for example, a fossil energy company, and you want to issue a green bond for something which is very small part of your action, and you have no transition plan, that will not go down very well. But if you have the transition plan and you show your colors that this is what I want to do, this is my plan, this is my path towards the transition, that will be very welcome. And one good example is that if you go to any major oil companies' websites, the first color that hits your eyes is probably green. They all tell how renewable energy is close to their hearts. But last year, the International Energy Agency revealed that out of the big oil companies' capex, only 1% had gone towards renewable energy. So this is what we want to avoid and what investors want to avoid. If you are truly on the transition path and you have a credible story, you are fine. Nobody's banned from that market. Only people who don't have a true and sincere story to tell about transition are not that welcome, but banned and not either, but they will have a tougher time for sure. So this is a bit what we do as well. And I think having sort of heavy emitting industries finding financing now, if they have no transition story, nobody has outlawed that, but yes, it will be probably tougher. And I think it's probably more expensive because there's plenty of liquidity out there. So you can probably find financing for a lot of things these days, but price could go up also because of the risk is higher. Risk is higher in terms of stranded asset, risk is higher in terms of your reputation. You don't want to disclose that I just put 30% of my balance sheet towards fossil fuel activities. I think that's maybe natural because fossil fuel industries, if they do not abate at all or do not transition, they use natural capital, and then there should be a price to that natural capital. So I think it's not about banning or outlawing anything. And as Nathan was explaining at the beginning about the taxonomy, it's not saying that you have to invest in this. It's only saying that if you want to invest in green and greener future, this is what you should be doing. And it also says that don't claim that you are green if you really are not. That's the only thing. If you claim that, you have to obey certain rules. So that's the idea, and that is also EIB's idea. I have to say also that from our point of view, we also have something which is called this idea on just transition. And we know that certain regions, certain industries, sectors will be harder hit than others with the transition. And we have promised that we will put 25 to 30 billion against this just transition over the next 7 years. And that will be concessional lending because it is mixed with commission money. And the third thing is that we also provide advisory to our clients. How do you structure your projects so that they are bankable, but also that they are aligned with what is needed right now? So I think we have to look at the whole landscape and all of those sort of features together to see the whole picture. So life is tougher for unabated fossil fuel industries. That is probably true, but they are not outlawed. But I think they will have to have a story to tell, and they will need to see what they can do on their side. Does that answer?
Yeah, it definitely does. So what we are looking at over here is if I may summarize, a clear transition path. And as long as it's credible, then a company is welcome to apply for those green, cheaper, more more sustainable funding. I find it very interesting. I had Piotr raising his hand, but then he disappeared. So I'm not sure if he's here anymore. But maybe Piotr Borowski, tell us what can be done on the state level to promote these kind of assets. Is there anything we can do? Are there any plans on the level of Poland to promote more conscious ESG investing or these kind of assets, or encourage companies to actually raise capital through Warsaw Stock Exchange using green bond framework?
Yes, I think we don't have to educate investors because there is no knowledge about this, about the need to invest in a green economy. And institutional investors are well educated, but I think that there is a big work to do to educate Polish enterprises, also the listed companies, because we list many smaller companies. Our companies are in size much smaller than in Western Europe. And there is a big educational project, and we are supporting this. For instance, the Warsaw Stock Exchange has a project with EBRD to educate companies how to report according to ESG standards, because it is for many of them quite a new issue and a big challenge. So I think that first of all, there is education needed. If the companies, the management boards will be educated, then we can talk further about the issuing the green bonds, about the transition, etc. And of course, it's an inevitable process, but the knowledge about this is still, I think, too low. So it's first of all the education.
Sounds fair, and I think that European Commission is trying to do a lot, communicating about those solutions to different audiences, and this panel is a part of this effort, I believe. So it is great that we had this opportunity to talk about it. I think that one of the topics that is still hanging out there, and I don't think we'll be able to really resolve it, is the issue of transition, and if the policymakers here in Brussels will be able to develop a tool that will help finance the companies that are that cannot be in green or sustainable tomorrow, and it will take a certain period of time. I think that this will be extremely interesting to follow, and I expect a lot of innovation right there. The next round of inputs in this discussion, I think, is planned in a couple of months when Platform on Sustainable Finance will create their own opinion on that issue. So fingers crossed. A lot of promising news coming from this panel, and as we are approaching 12, I really would like to thank all of you for your time. Eila, Sean, Piotr, Axel, Michał, that was extremely useful. I really appreciate your time, and I can't wait to see where we're going to be tomorrow. You know, the interest rates are raising, the yield curve is sharpening up. It's going to be a tough time for bonds, but hopefully the spread and the greenium that Sean described before will protect this asset and make it grow moving forward. Thank you, everyone. Thank you for this opportunity, and till the next time.
Thank you.
Thank you.
Thank you, David.
Thank you.